In today's session, we'll be taking up a problem from the exam kit on throughput accounting, the Yam company. So let's jump right in. Yam company processes sheet metals into products A, B, and C. So there are three products using three processes: pressing, stretching, and rolling. Raw material for sheet metal is first pressed, then stretched, and finally rolled. They have given the processing time per meter in hour for each product in each process. Identify the bottleneck process and explain why this is described as a bottleneck. What do you mean by a bottleneck? A bottleneck is a process or a machine which restricts the output of the organization. Now, in this case, we've got three processes. So look at the table very carefully. Is it the pressing process or the stretching process or the rolling process which is taking the maximum time? That is, it is very slow. For product A, it takes 0.5 hours per meter in pressing and only 0.25 and 0.4 in stretching and rolling process, which means that the maximum time is taken in pressing process for product A. Likewise, for product B, it is the pressing process which takes more time. The stretching and the rolling process takes lesser time. And as for product C also, it is the pressing process which takes the maximum time. The stretching and the rolling process takes lesser time. So what is the inference? It means that the pressing process will take a longer time, and the stretching process and the rolling process that comes after that will have to wait because the pressing process is not completed processing. So only if the pressing process is faster, we can increase the output. So it is obvious that it is a pressing process which is the bottleneck, or the process which limits or restricts the output of the organization. So the answer goes like this. Bottleneck is any process that restricts the output of the organization. Here, the slowest process is the pressing process. Output that can be generated by the pressing process will be lower than the other processes in the available time because it is slow. Hence, pressing process is the bottleneck. We will now go to the second part of the question. Calculate the throughput accounting ratio or the TPAR for each product. Now, for calculating the throughput accounting ratios, we need to calculate three ratios in total: the return per hour, the cost per hour, and finally the TPAR. So first we will start off with return per hour, for which we need to calculate the throughput contribution, which is the numerator. So let's see the details given in the question. The raw material cost per meter is $3 for product A, $2.5 for product B, and $1.8 for C. And the selling prices per meter are $70 for A, $60 for B, and $27 for C. So what is the throughput contribution? The throughput contribution is nothing but selling price minus the direct material cost. And both the information are given in the question. So the selling price of the three products I will be copying from the question. That's 70, 60, and 27. And as for the direct material cost, again copied from the question, it is 3, 2.5, and 1.8. So the throughput contribution is selling price minus direct material cost. So we get 67 for A, 57.5 for B, and 25.2 for product C. So now we have got the numerator of return per hour. Now we will see the product's time on the bottleneck, which is given in the question. So these are the question extracts. Processing time per meter an hour given for the three products in the question. They have given for pressing, stretching, and rolling. And we have found in part 1 that pressing is the bottleneck. So the product's time on the bottleneck is this row. So I will be copying the product's time on the bottleneck into our table. So the product's time on the bottleneck has been copied from the question. Now for return per hour, all that we have to do is we have to divide the throughput contribution divided by the product's time on the bottleneck. So return per hour is given by 67 divided by 0.5, 134 for product A, 57.5 divided by 0.5, 115 for product B, 25.2 divided by 0.4, $63 for product C. So we are done with the calculation of return per hour. Now we shall move on to the second ratio, that is the cost per hour. Given by the formula, total factory cost divided by the total time available on the bottleneck. So let's see the details which are given in the question. So these are the question extracts. Other factory cost excluding labor and raw materials are 18 million per year. On an average, 1 hour of labor is needed for each of the 225,000 hours of factory time, and labor is paid $10 per hour. Now, what do you mean by the total factory cost? Total factory cost are all costs other than direct material. So here they have given 18 million as the other factory cost. You will have to add direct labor cost also, because that also forms part of the factory cost. So total factory cost will be 18 million, which is given in the question, plus the direct labor cost, that is 225,000 of hours multiplied by the direct labor rate of $10 per hour. So the numerator will be 18 million plus 225,000 into 10 divided by the total time available on the bottleneck. The total time available on the bottleneck is again given in the question as 225,000 hours. So we substitute that figure in the denominator too, and we finally get the cost per hour as $90 per hour. So we write the cost per hour also in our table. So we have the return per hour and the cost per hour. And what was TPAR? TPAR is return per hour divided by cost per hour. So all that we have to do is we have to divide the return per hour by the cost per hour. So for product A, it is 134 divided by 90. For product B, 115 by 90. And product C, 63 by 90. So we get the TPAR as 1.49, 1.28, and 0.7 for A, B, and C. Now, if you look at the TPAR, product A and B, the TPAR is greater than 1, which means that the return is exceeding the cost. But for product C, it is only 0.7. That is, it is less than 1. That is, the return is less than the cost per hour, which means that C is not that profitable. That is, the rate at which the returns are coming in for C is lesser than the cost incurred per hour. Now let's get to the third part of the question. So they've said that assuming that TPAR of C is less than 1, and we saw that TPAR of C is actually less than 1, explain how Yam could improve the TPAR of C. So let's analyze the formulas. TPAR is return per hour divided by cost per hour. Now, if you have to improve the TPAR, then either the numerator has to increase or the denominator has to reduce. Only then the TPAR will improve. Now, coming to the numerator or the return per hour. So it is given by the formula throughput contribution divided by product's time on the bottleneck. So here again, if the return per hour has to increase, either the throughput contribution, that's the numerator, has to increase, or the product's time on the bottleneck, that's the denominator, has to reduce. The throughput contribution is selling price minus the direct material cost, which means that if you can increase the selling price, the TPAR will increase. And if you can reduce the direct material cost, again, the TPAR will increase. Increase the selling price, provided sales volume is not affected. Now, the general tendency is that if you increase the selling price, the sales volume may drop. So you can increase the selling price as long as the sales volume do not drop or sales volume is not adversely affected. And the second point is reduce the raw material cost, provided quality is not affected. So if you can procure cheap raw materials, that is fine. But please ensure that the quality of the raw materials is good. And can you state one method of reducing the raw material cost? you can go in for an alternate supplier that will provide raw material at a lower cost. And you could also buy in bulk. If you buy in bulk, then you will get quantity discounts. So we should write that point. Discounts are available for bulk buying, but the stock holding cost should also be considered. Agreed that you will get discounts for bulk buying. But if you buy the raw materials in bulk, then you need to store this in a warehouse, right? So you will have to pay rent for the warehouse. So always match the cost and the benefits. That is what is stated here. Discounts are available for bulk buying, but the stock holding cost should also be considered. So now in return per hour, we have completed the points relating to the numerator. That is a throughput contribution. Now coming to the denominator or the product's time on the bottleneck. Now if you can reduce the denominator, again the TPAR will improve. So the third point is speed up the bottleneck or reduce the time on the bottleneck. And what are the methods? By automation, by reorganizing the process, and by replacing the machine if cost is affordable and feasible. You can speed up the bottleneck by automating the process. Instead of physically laborers coming and doing the process, which might take more time, you could automate it and you can reorganize the process itself. Now, what is meant by reorganizing the process? You could observe the process and reorganize it in any way whereby the time is reduced. Now, when the workers go on a break, that is during the lunch time, maybe they will switch off all the machines. But that is not what we want. We want the bottleneck to work continuously because we can't afford to have idle time on the bottleneck. So maybe we could ask the laborers to go on a break on a rotational basis. So any reorganizing or modification of the process that reduces the bottleneck time could be considered. And the last method is you could replace the machine if cost is affordable and feasible. If you can afford to buy a more modern machine wherein the time is drastically reduced, then you could go in for a new machine also. So now we are finished with the analysis of the denominator of the return per hour. Now moving on to the cost per hour. So cost per hour numerator, if you see total factory cost, if the numerator reduces, then again the TPAR will improve. So the next point is reduce factory cost. And how do you do it? By outsourcing or de-skilling. Now, what do you mean by de-skilling? De-skilling means sometimes we might have employed skilled labor to do a particular job. And we know that skilled labor is expensive. If we could train an unskilled laborer or a semi-skilled laborer for doing the same job of the skilled labor, then we could definitely reduce the cost. That is the meaning of de-skilling. That is substituting a skilled labor for an unskilled or a semi-skilled labor. Or alternative suppliers for indirect materials. Now, indirect materials also form part of factory cost. Now, if we could find alternative suppliers for lubricants, for cleaning materials, who will supply the materials at a much reduced price, then again, the total factory cost can be reduced. So these are the four methods in which the TPAR could be improved. Now, moving on to the second part of subpart C, assuming that TPAR of C is less than 1, we know that TPAR of C is less than 1, should C be discontinued? And outline 3 other factors that YAM should consider before a cessation decision is taken. Say a customer comes up to buy C, and seeing product A, he buys that too. So there could be lost related sales. So the question that is to be asked is, if C is lost or discontinued, will YAM lose customers that bought it along with another product? That is, if you're discontinuing C, the sale of some other product might get affected. This is something that we have to consider. Now, the next point is, though the return per hour of C is less than the cost per hour, there is return per hour, right? It is not zero. So that will be lost if you discontinue C. Lost returns of C. If fixed cost cannot be reduced by discontinuing C, then the company will have lower profits due to the lost returns of C. I've just copied the table of calculation that we did earlier. So if you see here, the return per hour of C is 63 and the cost per hour is $90 per hour. The cost per hour is the fixed cost, correct? Now, if you discontinue C, the return per hour will become 0 and If you cannot reduce the fixed cost or the cost per hour, then what is the point? You're just losing the return. So we will have a lower profit than we did earlier. So that is what is stated here. If fixed cost cannot be reduced by discontinuing C, then the company will have lower profits due to the lost returns of C. Now, the next point is we should not always focus our attention on the short run. We should always think from the long run point of view. That is, in the long run, if we expect a higher returns from C, maybe because of a shift in the customer preference, then we have to consider that also. So the last point is the long-term expected cash flows from C should also be considered before we discontinue C. So finally, our job is done. If you have any doubts, do post it in the comment box below. And if you have benefited from the video, do click the subscribe and the like button and do share it with your friends whom you feel will benefit from the video. So thank you all and meet you in the next video.